Be Wealthy and Smart, episode 1425.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why artificial intelligence will drive future market performance. This is according to a report from JP Morgan Asset Management, in which they said U.S. companies already dominate the global stock market when it comes to size, but JP Morgan Asset Management shows that it's likely to continue, and they attribute the boom to artificial intelligence. In JPM's 2025 long-term capital market assumptions, released recently, the team projected the U.S. company's market cap share of the total global equity market will fall from 64% currently to 60% by 2037. Still, the U.S. would maintain a large lead over the estimated second largest share of global equity markets, and that would be China. JPM believes that the U.S. will continue to lead by market cap share as artificial intelligence benefits expand beyond a few large tech names that have dominated the market rally over the past year to companies in various industries. They give two reasons for the prediction: revenue production and margin improvement. The first will come from the money pouring into AI benefiting companies outside of big tech. This plays out as tech companies buy AI chips from the likes of Nvidia and as they need more power. These AI operators are forced to spend with companies in the utilities and energy sectors. As AI makes companies more efficient and eliminates the most simple work, eventually cutting down costs, U.S. corporations should get a boost to their profit margins. It's going to be the U.S. predominantly, and then obviously Europe will follow because you're starting to see some adoption there, said JP Morgan's Asset Management's Global Head of Multi-Asset and Portfolio Solutions, Monica Isser. Apollo chief global economist Torsten Slok wrote in a research note, to put the current U.S. dominance in perspective, just Nvidia's market cap alone is larger than most other G7 countries, and that could be a risk to the market overall. He said global equity markets, including retirement allocations to equities, are basically leveraged to Nvidia. Let's hope the value of Nvidia doesn't decline significantly. And then they have a chart where Nvidia's market cap is larger than most G7 countries. At $3.5 trillion, Nvidia sits above Canada at $3.3 trillion, the UK at $3.2 trillion, France at $3.1 trillion, Germany at $2.5 trillion, and Italy at $0.8 trillion, only to be exceeded by Japan with $6.4 trillion of worth. Some others have a more sanguine view of the AI superpower's dominance, though, in a recent research note detailing why the S&P 500 could average more than 10% annual returns over the next decade. DataTrek research co-founder Nicholas Colas pointed to the U.S. being at the forefront of AI adoption and well-positioned to dominate amid the technology's global adoption. Colas wrote the odds that a non-U.S. tech company will rise over the next decade and unseat the large tech companies currently driving the U.S. market share like Apple, Nvidia, Microsoft, Amazon, Alphabet, and Meta are almost zero. The U.S. continues to dominate global venture capital, Colas wrote. If a new U.S. business does eventually threaten their preeminence, then it will certainly go public, be in the S&P 500, and drive future returns. So I thought that was an interesting report. It shows the importance of Nvidia to the entire market, not just to the U.S. market, but also how AI is driving a lot of these huge returns and valuations. And while there's room for other companies to perhaps move into some of Nvidia's market share, because of the massive investment required, it doesn't seem like anyone is threatening Nvidia's market share at this particular moment. And for now, artificial intelligence is still driven mostly in the United States. So if there is a competitor, it likely is to come from within, which will keep our markets leading around the world. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.